Now to a $25 billion deal aimed at helping US homeowners and the beleaguered housing industry. The settlement reached between the US government and 5 of America's biggest banks came in response to foreclosure abuses. It marks the biggest agreement of its kind involving a single industry since the tobacco settlement of 1998. From New York, Michelle Fleury has the details.
Federal and state officials came together in America's boldest attempt yet to hold banks accountable for the mess they made processing foreclosure documents when the housing bubble burst.
We have reached a landmark settlement with the nation's largest banks that will speed relief to the hardest hit homeowners and some of the most abusive practices of the mortgage industry, and begin to turn the page on an era of recklessness that has left so much damage in its wake.
Even now, there are plenty of reminders of broken dreams. For those facing foreclosure, some relief may be on the way. Under the settlement, the banks are required to reduce the debt of borrowers who owe more than their home is worth. Others should be able to refinance their mortgage at a lower rate. And those who lost their homes improperly should get some money back. Rhoda Carter was a victim of wrongful foreclosure. She hopes to benefit from the settlement.
Well, when I heard it on the news, I just cheered because I thought, this is it. We're finally at the end of this. It's going to be over in a matter of weeks now. It just depends on, I guess, if the bank sees it that way.
Speaking about the deal that was a year in the making, U.S. Attorney General Eric Holder chastised the banks for the damage they caused.
These failures didn't just hurt borrowers who might have been able to afford modified mortgages. They fueled the downward spiral of our economy and of communities nationwide.
While today's settlement sounds like a lot of money, it may not hurt the bank's bottom line. Wells Fargo, one of the 5 banks, has said its share under the deal has already been accounted for. The settlement also protects these financial institutions from civil lawsuits brought by state and federal officials, although they could face criminal action. Still, critics say this amounts to little more than a slap on the wrist for the banks. Michelle Fleury, BBC News, New York.
And for more on the significance of today's deal, I'm joined now by Dean Baker, co-director of the Centre for Economic and Policy Research. Thank you very much for joining us. Now, $25 billion does sound like a lot of money, but is it going to be enough to kickstart the housing market and get it moving again?
No, I mean, it really doesn't address any of the fundamental issues in the housing market. What we'll do is provide some relief for homeowners who are facing a loss of their home or underwater. Just some sort of simple arithmetic on it. We have roughly 12 million homeowners who are underwater by a total of about $700 billion. We're talking on the order of $20 billion in relief for them. So it provides some help, but it's not a game changer. We're in the same basic situation.
So what about the broader economy then? Bearing in mind that the collapse in the housing market triggered the economic crisis, is it going to do anything to benefit the economy in the long term?
We probably won't be able to see the effect. I mean, basically the housing market is still settling. There's a lot of areas where the bubble's deflated. Other areas, prices are still falling. It's hard to see this affecting that at all.
Now, are the banks the best vehicle to administer this programme, bearing in mind that it was their failings that contributed to the collapse in the first place?
No, in fact, that's one of the things that's really problematic, and that's in two ways. First off, we don't know what the counterfactual is because we're saying, okay, you have to have these write-downs. Well, they'd have some write-downs anyhow. You have a home that's worth $200,000, a mortgage that's $300,000, they're going to have to write some of that down anyhow. So we don't have a clear counterfactual. A lot of this might just be write-downs they did anyhow. The other point is that most of the loans are actually in pools. They aren't the banks. They're servicing them for investors. In effect, what they're doing is paying a settlement with other people's money. That's pretty unusual.
And what about the homeowners themselves? We saw the lady there who lost her home due to wrongful foreclosure. Presumably, she's not going to get her home back.
No, so basically what we're talking about, she'll get $1,500, $2,000. That will be nice. I'm sure she'll be very happy to get it. But if she really lost a home that she was entitled to keep, that doesn't go very far.
And again, we heard that the banks will not be liable for any criminal action, but what could be the end result of this? I mean, is there any further action to be taken?
Well, not on this issue. I mean, this is referring narrowly to abuses of the foreclosure process, but there's still a lot of issues about the issuance of mortgage, fraud in many cases, securitization. So there's a lot of other issues that in principle are still being investigated. Whether anything comes of that remains to be seen. But this just settles a relatively narrow portion of the housing crisis.
And very briefly, what would you like like to see happen here?
Well, I would like to see security for homeowners, something I and others have pushed, right to rent. Let people stay there following a foreclosure for 5 years, paying the market rent. It's simple, it's fair, it could be done tomorrow.
Dean Baker, thank you very much for joining us.
Thanks for having me on.